So my next guest says that even when you strike out the noise, and the payroll number was still a whole lot more trick than treat. Joining me now, Rosenberg Research Associates founder and president, David Rosenberg. David, everyone that contributes to the number, an estimate to the consensus model, obviously had to know that there were hurricanes and strikes. So when I hear financial commentators start to talk like that, it blows my mind. Now, you could argue it was a lot worse, but they knew it was factored in there. So let's talk about what the number means to you.
Well, I know that's what makes it so laughable is everybody saying, well, there was weather involved, but that's why the consensus was at 100,000 and not 200,000. But, the reality is that, look, there was weather and there was strike activity. And when you add up the distortion, it was 75,000. So, whether you slice it or dice it, that means that the underlying number on the headline payroll was 87,000. Right. That is insignificant. Right. And so it was immeasurably weaker than the consensus, even adjusting for the skews from these two factors during the month.
So, David, if we took that number a step further and then say take out those 47,000 government jobs, we're talking only like 40,000 private sector jobs. And that's not the sign of a healthy, strong economy. The Wall Street Journal yesterday said we're going into, whoever wins the election next year is walking into a strong economy.
Well, that's, we'll see what happens next year. I guess that, if we have redefined American exceptionalism to an economy running on fumes that's generated by asset inflation, to generate a lower savings rate at the benefit of consumption, and 6% plus deficit GDP ratios. I mean, the government sector, we have actually, as you said, the strongest underpinning, the most dramatic impetus to the economy is not the AI craze, it's government. Back-to-back years of 6% plus deficit GDP ratios, and this is American exceptionalism. France right now has the same deficit GDP ratio as the United States, and they're in a fiscal crisis and just got put on credit watch by Moody's. But in the United States, let's just continue to pile on almost $2 trillion of debt every year and generate as much economic activity out of that as possible. But, back to the employment report, the one segment that should not really have been affected was the household survey. And it was negative 127,000. And full-time jobs were down 164,000.
Right.
And when you look at the fact that the number of jobs that declined permanently, so the hurricane jobs and the strike jobs, those aren't permanent job losses. The number of permanent job losses in October went up 154,000. And that tells you a lot more about what is happening fundamentally in the economy, beyond all the cheerleaders in the media, and transcends really, these short-term gyrations caused by storms or strikes. I would posit that the economy is doing far worse than the BLS.
Right.
I'll take the L out of BLS. When we look at the survey data, we looked at all the survey data. It correlates to 0% growth of the economy right now, but we have the government data releases, and I guess I'm not a conspiracy theorist normally, but I'm almost still tilting in that direction these days.
Hey, David, I got just a minute to go, and it's always a pleasure talking with you. So we have personal consumption and spending, and you referenced this a moment ago. 3.8% consumption, 1.1% income. If you get X transfer payments. What boggles my mind is how long we've been able to keep this going, that I think a lot of people believe that it's unstoppable, that it will never come to an end.
It is actually incredible that, as you said, 3.8% consumer spending growth in real terms, bumping against 1.1% in real disposable income. But you see, we measure success in the economy by how much you spend, not by how much you earn. But what falls out of that, of course, is that the personal sector is comfortable as they look at their 401k plans every single month, and they think that I got the golden goose. So people are spending more and more after that of their after-tax income. I would say that is not organic growth.
Right.
That is really, a sugar high, and it's not sustainable. And that's what I'm saying, is that the foundations behind this wonderful economy, and it's not a deliberate attempt to be bearish as much as to calm things down here, that beneath the veneer, things are less robust than what you hear in the popular press, and frankly, what you see out of most Wall Street investment banks.
Yeah. David, I appreciate you shining the light. Your work is second to none, and thank you for coming on.
Thanks a lot, Charles. Have a great weekend.
You too.